Welcome, everyone, to the Wealth Rebels Show. I am your host, Emma Wright, and today I am joined by one very epic female founder, Rebecca Robertson, who is so aligned, I feel like, in your journey, Rebecca, in empowering people with their wealth, specializing with female financial advice. So, Rebecca and I are both financial coaches as well. We've worked on the bigger picture of financial advice, which means we do take a very different stance on how financial advice should be created. Very much, and we were just talking about this offline before we came on, financial planning led advice. It's so important, and so many people are not doing that, Rebecca, and we'll dive into that. And I am so fussy when it comes to recommending my clients onwards to advisors, because for me, the financial advice sector isn't full of people like Rebecca. So I'm so happy that you're here. I'm so happy that I've found you. I'm thrilled that we've met because already I've shared so many of my clients onward to you, and they have then gone on to see just how different you yourself are. And I can't wait for people to learn more about you, but also how different it is that your firm creates financial plans and advice. So, Rebecca is an award-winning entrepreneur. You're a TEDx speaker, an author, a podcaster in your own right. You're the founder of Evolution Financial Planning, and we'll drop all the links into the notes below so you can connect with Rebecca after this if you feel like you just need to know more. But before we dive into hearing from Rebecca, I just want to remind you that in order to kind of shine a light on female founders doing amazing things in business like Rebecca, please do subscribe, like, follow, share the show because, we give up our time to just bring this knowledge to you, and we want that impact to be spread, shared, sprinkled into the world. So, Rebecca, welcome to the Wealth Rebels show.
Thanks for having me. I'm really excited to hear what we talk about because being that you've got an industry background, we've got to be careful not to get too jargon-like, but because we've got very similar passions, I think it will open up the conversation that bit more.
And I talk a lot about jargon because I feel like people need to know the jargon. I feel like we shouldn't avoid it, but we should notice it and then explain it because the more that we can empower people to understand what does equity mean or what does wealth management even mean. And I was just having this conversation with a friend of mine over a cup of tea. People don't know the terms. Jargon is just jargon because we don't know it, and we like to use complicated, fancy words. But actually, when you break them down, they're quite simple when you
Exactly.
understand it. But I really encourage you to use your language, and then we can kind of talk about what it means. I want to firstly dive into and we were talking about this off air because I feel like the journey into financial advice for many advisors is always an interesting one. And I just feel like it's a really great place to know who you are. What led you to where you are today?
Well, it's quite a long story, so I'll try and keep it as short and sweet. I just think, I'm sure the stories are really good fun, but I'd like to try and sort of get to the point really because I'm 45 this year and I started in the industry when I was 19, so I've been in the industry a long time, I've run my own business for 15 years, and that in itself has been like a journey in itself, being an entrepreneur and running my own business in that time. But I never thought I'd work in financial services. I never thought I'd work in a bank. I never thought I would equate to much, if I'm honest. And to give people a bit of context, thank you for that lovely introduction. But I took my level 6 yesterday. I plan to be chartered within the next sort of 6 to 12 months, and a chartered is the equivalent of like a post degree, and like a master's kind of thing. It's quite a high level qualification, and but I when I went to school, I was never really going to equate to much. I left school with three GCSEs. I'm pretty sure I'm dyslexic because both my children are, and my husband isn't. So everything that they do, I've done the same. But as I'm older, I've managed to find ways to navigate it. But when I was younger, I struggled an awful lot. They didn't have, when I was at school, the things that we have available to us now and the understanding of what we have available to us now. So I was a receptionist when I was about 18, 19. I was made redundant. my dad had just opened up a bank account for me at Nationwide. I literally just had a bank card, like, and I didn't even understand what it meant. I didn't really come from money, so money wasn't really explained to me. Wealth wasn't really explained to me. My single parent dad brought us up, and he done his best. But bought me my first car and things like that. But it wasn't like I was handed over a lump sum, to go off to university or anything like that. Um, and so I started actually working in a bank when I was made redundant from my receptionist job. And I worked for Alliance and Leicester in Maidstone, but it was a complete fluke because but previously to that I was working in the job centre as a contract, and I was going to be signing on the Monday because I didn't have a job, the same job centre. And I had a call from the agency saying we've got a job for you tomorrow on a Saturday, and I said no, look, I'm not going to go and work in back in a fruit factory packing. I'm not working in KFC anymore. All the kind of jobs I'd done in the past. I said no, this is in a bank. And I said, no, you've got the wrong person. This is not for me. Like I can't work in a bank. I barely know what a bank does. Anyway, I turned up that morning. There was a queue out down the road. When people actually went to the Saturday morning, went to their bank to deposit money. Many years ago. And yeah, I was a temp cashier in Alliance and Leicester, in Maidstone. And there's obviously a whole story after that, but that's how it started.
Oh, that's what an inspiring story because I went to uni to go into trading to become chartered, and it just shows you don't have to go down the university route. We don't, if anyone's listening to this that is coming from, different backgrounds, it's trust. I always think the thing that I wrote down there was trust your path. Just keep going, trust your path, follow your intuition. And then things come along that you don't expect. And when you tell yourself this isn't for you, it's always like, why not? Why can't this be
Yeah.
me?
A lot of people said I'm very resilient, and I think my upbringing has meant I've had to be quite resilient. I'm not sure if I'm stubborn or resilient, but I just felt like there was no alternative. When I first took my driving test, my theory, I failed it so many times, but I passed it in the end. And then when I had to take my CMAP exams, which is basically like your basic mortgage exams, I was made
Yeah.
to do them when I worked for Bradford and Bingley when I was about 21, 22. And they told me if you don't pass these exams, you haven't got a job. And I found them incredibly hard. I came out in hives. I was so stressed out. This is not something that, at that point, my brain had developed well enough to be able to navigate how I
Yeah.
learn. And I didn't know how I learn. But it took me about 6 or 7 attempts to fail in my CMAP one, when I was about 22. And yeah, I just think sometimes we put our own obstacles up in front of us. And if we have the right support and the right people around us and the right determination, we can actually do anything.
I know we're here to talk about the financial stuff, but there's some really key things there that you've shared for, and I know a lot of people follow me for the wealth and the holistic part of kind of the Wealth Rebels show because we know that it's not just about money. The thing that struck me is failure isn't an option for you. And we can be more than one person. Are you stubborn? Are you resilient? Does it matter? Because it's okay to be stubborn. It's really important to be resilient. And your story for how you got here has made you who you are. And I often talk about the spiritual aspect of, I love that, I'm very spiritual and life happens for you, not to you. I mean, when you realize that we're going through challenging times, always challenging times will come up to make us stronger, make us more resilient. And it's important to be stubborn on sometimes trusting your path, failure not being an option. Now, knowing the future, what would you say to young Rebecca about how to learn? If you were to learn, how are you doing your chartered exams now without the same level of stress? How
Yeah.
do you navigate that?
This is the first time actually in this last sort of 3 or 4 months that I didn't have to do the exam. I did it out of choice. I wasn't being made to do it to have a job. And secondly, as I was doing it, I was not sort of mentally struggling with myself saying, oh, why are you even bothering? Why do this? Normally I'd have imposter syndrome quite badly. This is the first time I've not beaten myself up and I've actually said, yeah, this is hard, but I can do this. And what I've accepted who I am and what I'm about, and rather than trying to feel ashamed of it, on training courses that I've attended, I've told them that I'm dyslexic. I'm not ashamed of that. I've achieved great things in my life. Actually, dyslexia is a superpower. So I would tell myself, my younger self, that you will have struggles, you will find it hard, but I honestly believe now that, and this is more on the spiritual side of things, that I was meant to go through that. I feel that my path and my light that I'm meant to shine now is to enable people from all kinds of walks of life to, I don't come from a wealthy background, and I'm actually, that's part of my story. That's part of what I'm meant to be here to help people with. Um, so I would just tell her that you're going to be okay, everything's all right, and just give yourself a break. Stop being so hard on yourself and stop beating yourself up quite so much, and just enjoy that journey, because the path is laid out in front of you. So you might as well just embrace it and take it as it comes.
Yeah. And it's going to be bumpy and it's going to be ups and downsy, and you just don't know what's coming your way. We don't know anything. So why do we, and I know we do financial planning, and this is like sometimes the
Yeah.
duality of it, right? This makes me laugh all the time.
Yeah.
To have a plan isn't to set the plan sometimes, but it's the clarity of what it gives you to help you to create the next steps is what's really important with that. And we'll come on to that. But oh, there's some really amazing things there. I agree. Everything that we are faced with is our superpower, right? So many people that I coach where they go, but I'm frivolous. I'm like, I wish I was frivolous. I wish I was more spontaneous. I'm such a planner to the fact that I am so boring at times. I'm like, when am I doing this? I need to know this. Be spontaneous, Em. I wish I could be more spontaneous. Every part of us that we are told is negative. You're a spender, or you're a saver, or you're an investor, or you are, a dyslexia, you've got ADHD. All of these are parts of you that make you special and unique. And I love the fact that you just said, I am that. And that's really great. And I think empowering people to embrace that helps to relieve that imposter syndrome, doesn't it?
100%, yeah. And it's really important that people accept who they are, and
Mm.
warts and all. And actually, on the other side of that, when once you have done that, it's a massive superpower. One of the best things that I'm good at is I'm really good at understanding very complicated things and explaining them to clients in a really simple, easy way. And not because they're not clever. I mean, my clients are, like earn a lot of money, um, you know, a real range of clients really, but there are some really highly educated people. We're not talking from a degree of that because they don't understand it or they're not clever enough. It's none of those things. But I'm able to explain it in a way that they can then make informed decisions and actually make some really exciting changes in their life that allows them to move forward and feel real peace and calm for the future. So actually my sort of, what I always viewed as something that was negative is actually, I've realized now, is actually why I'm very good at my job.
100%, because you can explain things. We talked about this again before we came on, about jargon. you know, I couldn't go and be a doctor because I don't know half the stuff. I'm doing my anatomy and physiology at the minute for massage, and let me tell you, can I remember bone names? I'm chartered financial planner, and it takes practice to remember things. And so you could be running a multi-million pound business, but not understand financial services. Why would you? But what's beautiful is you've got someone like Rebecca who can explain it. And we talked about the jargon, right? We want to use jargon today in a way so that we can then explain it so that people go away understanding better some of the knowledge, some of the things that when they go and have a conversation with, even if they've got an existing financial advisor, if their financial advisor uses something like the word equity, they just know that equity is just a shareholding in a company. They just feel a little bit more knowledgeable when someone says, oh, it's 50% equity in bonds. It's just understanding over time the terminology of that sector so that then we can go away and really interpret it. There's so many misconceptions about what a pension is. I hear it all the time. Pensions are so bad. Pensions, it's like they
I
rob you.
do.
I'm
I've
like,
met two people recently said, "Oh, I'm not a massive fan of pensions," and I asked them why, and they don't really understand.
no.
Because they're slightly older, some of them, or they've got parents around them who are older that have told them bad things about pensions in the past. But we're talking maybe 20, 30 years ago. They're not like that anymore.
No, what is a pension? This is, what is a
Yeah.
pension?
It's really a pot of money that you get a certain amount of free money added to it because you
Yeah.
don't pay as much tax. And you can draw on it later on at a different rate depending on what you need as income. That's it. It's just a pot of an investment that is
I
taxed a particular way. That's it.
That's it, exactly. It's what goes around your money. I always think
Yeah.
it's the wrapper. I call it like, wrapping, tax wrapping, it's what goes around the money and what goes in it then is really important.
Yeah.
Um, and then it's how it's treated on the way in,
I,
on the way out, and whilst it's in there.
I always describe it as jars. Like, so just imagine you've got like three or four jam jars and they're all jam and they've all got a label on the front with the flavour on. So one will be apricot, one will be raspberry, one will be strawberry.
Yeah.
And your strawberries are your pension, your ices are your apricot, and your raspberry might be your general investment account. Or if you get really snazzy, you might have a more an even more tax efficient pot like a VCT or an ERS or an offshore bond or etc. So you have different flavours of jam. At the end of the day, they're still invested, they're still the same thing. It's that they've got just a different sort of slightly flavour to it, but they're still jam.
It's still jam. Yeah. Like, for example, an EIS, it's still investing in a company. It's a different type of company, a very young company, different tax benefits to your general investment account, which would have normal stocks that are listed on a stock market. But they're still investments. It's still an investment that we can get the tax benefits from. And that is why we need, when you start to build wealth, and I think this is going to come on to in a minute why you need financial advice. I'm skipping ahead a little bit here, but why you need financial advice is because often as your wealth builds, then the choice of the jars can become really important, right? The
Yeah.
choice of the jars, how they slot together, how you might draw down from them will become really important. Before we dive into that,
Mm.
one thing that really is going to, if I don't mention it, you said you don't come from a wealthy background, firstly. What is wealth? Physical wealth and that attachment, you don't come from money or from the physical aspects, right? But
Yeah.
wealth, you have your dad single-handedly raised you. The wealth that you've experienced from your journey has been profound, right?
Yeah, and I think that has affected me. Like for example, my grandparents, I was brought up with my dad and my grandparents, and my grandparents, my nan was a seamstress in a factory, and my granddad worked in a coal mine, and my dad recently has wrote a book about his life, and I've read. It wasn't quite ready when I read it, so I read the first sort of three or four chapters, and I didn't realize how little we had growing up. We're sort of quite I wouldn't quite say poverty, but I would say it wasn't, maybe quite
Yeah,
close to it.
yeah,
Into comparison to today's standards, definitely.
yeah.
And they moved from Scotland to Kent. So when I was growing up, they very much had that sort of that mentally attitude towards money. So, for example, I've got horses now. So one of the things that I won't say I'm a multi-billionaire or multi-millionaire, but I'm very wealthy because I have horses. I've managed to support my daughter with her horse career, which when I was growing up, I was never allowed to do horses and I didn't start riding until I was about 25, 24 when I was working in a job full time, paying for my own salary. I worked from home, so I was able to go out and start to learn, and I started riding horses then. But growing up, because my dad viewed horses and horse ownership as people, like royalty, because that was sort of like his perception of it. It's like, no, you're not having a horse. No, you can't go. My friends would go horse riding. No, you can't go down there. It's for the, for stuffy, stuck up people. Like his mentality towards it affected my mentality towards it. And my mum, she was actually married to somebody who worked in government, and she was actually quite well off. And so for birthday presents and Christmas presents, she would buy me vouchers for riding lessons. So it was really interesting to me in terms of my background and the way I was brought up that I sort of was access to these two different worlds. And it took me a long time to sort of shed some of that kind of historic and that sort of background, if you like. So you're completely right. The wealth and the knowledge that I got from my dad and that resilience that I got from that background is, I do not knock it at all. But equally, when I was 18, 19, going to work from a bank, I literally didn't even know what a bank account was. I didn't understand it at all. It was very much, we weren't really taught about money and about pensions or about investing or about saving. And so quickly, when I went to work in the bank, so I learned how to. I knew what a bank account was then after a few years, and I knew what lending was, and I knew what you could get a credit card and you could take out loans. So by the time I was about 24, 25, I was in about 30 to 40 grand's worth of debt because I actually hadn't shed a lot of those issues from my past. I hadn't come from a lot of exuberance of a lot of nice things. So I went and spent lots of money on lots of nice things. Got a car loan, got a furniture loan, got loan for everything that I wanted to sort of what I felt like would fill me up, if you like. And rather than having that sort of save for it mentality. So that sort of lack of financial education growing up, that's how that wealth element affected me and affected my mindset going into even later on into my 20s.
We call this in financial coaching, don't we? Your money story. Like when you go back and you see how it's impacted how you treat money, because often how you treat money is how you feel about yourself on a deep subconscious level. But what's profound is I really believe that your money story doesn't, you can either stick in that victim of
Yeah.
the past or you can change your future and you can, it's just a story. The past is the past, and how you step into your future, it's now, it's in this present moment, and you've really stepped through it. Funnily enough, I come from Bradford. Yeah, I did go to uni, but I dragged myself through uni, right? And I think that meant that I didn't have imposter syndrome from a different reason because I didn't didn't know that in order to get on the trading floor, I needed to have like some sort of scholarship or sponsorship or a rich dad. I was in a Bradford bubble of like I can do and be whatever I want. And I often talk about that. It's so funny how you interpret challenge. I was like, there's just the only objective I had was I'm never going back to Bradford. Don't come back to Bradford. I don't want to be in Bradford. No offense to Bradford. I just did not want to live in Bradford for the rest of my life. I had big visions, big dreams, and and whilst kind of my money story was there around, we didn't have loads of money growing up at all. We lived in Bradford. I grew up with horses. I love how little synergies. I grew up with
Um,
horses. My mum had a horse. She prioritized having a horse at the detriment to everything else, which is another interesting story. So I've actually gone the opposite. I don't want a horse anymore. I'm quite happy without one. So we're like this yin and this yang, you and I, aren't we? But it's so interesting to reflect on your journey and just know
mm,
it doesn't have to define you. Um,
no.
why, now that you are where you are today and you're doing all of these incredible things, running a business, doing all of the different things that you do as a business owner, um, why are you different? What
Mm.
makes you you?
It's a really good question, and I know some fantastic financial advisors and financial planners, and so it's not that there isn't another me out there. I know some amazing people. I think what makes people like me unique is that when you with this financial advice, and you've probably explained this before on the podcast, but there's financial advice and there's financial planners. And so for me, planning comes first, products come second. So a financial advisor typically would focus on products. So they'd focus on the pension, the ISAs. But my thing is that, well, if you've got money to invest, whether it's £100 a month or £1 million as a lump sum, whatever, you need to know what you're going to do with it. And so how that's going to affect you and how that impacts you. So will you have anything that's coming up in the future? Do you want to pay for university fees? Are you going to move house? These are the conversations that I've literally had this morning with clients. And without knowing exactly what you're roughly planning, it does change. Things happen. Life happens. But once you've laid down that path, and clients can see, well, if I do X, I'll achieve Y, and they know that they have a trajectory towards that, they have great then peace of mind that they're then able to execute that plan, B, have a rough idea of what they need to do to get there, and also that they don't have any other money. They know they could spend it in more ways that they want, because a lot of them are earning quite well and they find that they're wasting it in different ways. So the planning for me comes first. So I wouldn't say that's completely unique, but there's not many that can do both. There seems to be people that will do the advice and there'll be people to do the planning, but there's not people that would do the both. And that's not to say that that's right or wrong. But when I do speak to clients, I don't do so much what I would call coaching. I do ask about their background. I do ask about them sort of mentally where they're at, their money mindset. But if they were looking for more sort of, I really am holding myself back. My history is, causing too much of an impact. I'm not able to move on with my financial mindset. I keep procrastinating. I keep putting things off. Then I'd send them back to Emma, because that's you, obviously, Emma. I would not sort of spend hours and hours coaching people through that kind of mindset. But I would if they were sort of done that piece of work and they were ready to move on to the next stage, which is more, I guess, the practical, like the hands-on stuff, the stuff that sort of takes a bit of it's hard, just as hard work, but it's more the sort of practical, having to dig paperwork out and, research what you've got in place. So there's that. I think one of the things I think is personally unique to me is that not just my charging structure or the fact that I don't have a cap on what kind of clients I speak to, that's sort of around my business values, but me as a person, like just individually, and the team that I try to have around me in terms of how they work with people, is we're so transparent, we're so like upfront about everything. And I talked to my client I was just talking to, he's telling me about his Lego collection. It's his Lego collection, but I talked about that Lego collection. I understand exactly what Lego is built, how it's worked for him. I like to get to know people and be really interested in them as a person, so that I can really give them bespoke advice. I think clients feel like they can ask me anything, nothing stupid, nothing silly. I think I'm just down to earth and super approachable. And I'm always got the clients sort of needs and at heart, to make sure that they are seeing value as a business as we're delivering it, but B getting the outcome that they need to achieve the goals that they set out personally. So recently there was a client, mutual client of ours. They'd spoken to a financial advisor before. This particular financial advisor was trying to, what we call, shoehorn them into a particular investment portfolio. I'm completely independent and I'm not tied to anybody. So I reviewed that existing pension and then gave a breakdown of funds that were available with that pension. She could stay where she was. And that's all she wanted to do. That was her objective. That was her need. That's what she wanted to achieve. But the financial advisor, because of the way, not because he's bad or unethical, it's just because of how the business is set up, wasn't wanting to do that for her and was needing to do something else. So it's not just about me as a person. I've tried to also make the business and the proposition work in a way that meets the client's objectives more authentically.
And this happens all the time, Rebecca. I was having a conversation just yesterday with one of my clients, who is one of my coaching clients, that came to me and said an advisor's trying to get me to move money to their wealth management proposition. They told me that their proposition would have made my pension pot £1 million instead of what it is. And I'm
They
like,
shouldn't be saying that.
they cannot say that.
They
And
can't be, they shouldn't be saying
it
that.
happens I hear it all the time because I coach people.
So bad.
They tell me so much, and I get this. I'm just like mortified. I'm like, they can't actually say that, because here's
No.
why. It's simulated performance, right? Anyone with hindsight can say that something could do better with hindsight. Anyone can do that. I used to manufacture structured products in the investment banking days. We used to simulate past performance to show the bank assurance guys why they should sell our FTSE call options in the bank, right? Yeah, back in the day, when structured products were sold in the bank. And so I know what simulated performance can look like. You cannot say that, but also, and this is the interesting thing. I was like, have they done a cash flow? No, they hadn't done the financial plan to look at what they needed. They hadn't actually reviewed the existing pension to make it right, to see if the existing
No, a
pension
lot of them won't touch
good.
it. It's too much hard work.
Yeah, it was just like you need a wealth management service. You need what we do generally. So they come out with the fancy brochure of this is the wealth management. We do trusts. We do this, this, and this,
Yeah.
and you get all of this, and
That's all jargon, right? That's
it
just all
it
noise.
is it's smoke and mirrors
Yeah.
because it might be, and this is why I love you, Rebecca, because you could recommend that because you
Yeah.
can recommend a DFM, a discretionary fund manager,
Yeah,
right?
I'm actually moving away from them quite a lot. I think I've only got one, and that's a specialist. That's a specialist. All the others, I've moved away from DFM models because they're overly expensive.
Overly expensive.
They're not necessary. I can do it. I can do it for them, and not because I'm fund picking, but actually the industry is in general is moving away from
Moving
individual fund
away,
picking
yeah.
anyway, and we're more sort of we're managing portfolios of funds really than
Yeah,
anything
like
else.
model portfolio services are
Yeah,
becoming really great, and you can have that on a platform, right, where you can, and then they've got control. They're not just with that particular DFM. They might have that DFM's model portfolio
yeah,
here, but then they might go into something else, and they can be on a platform that switches it around, and
yeah.
you
We've got
then get to give
quilters.
that advice.
We've got access to quilters, we've got access to Investco, which is also Brooks McDonald. Investco's been taken over by somebody else now. That's another one. I can't forget who it is now. There's Brooks McDonald. All of those we have model portfolios with, but I would never go to them as a DFM because I get because we're part of a large network, we get
Yes.
leveraged on a fee. So rather than being 0.7, it's 0.15. So it's a huge difference to the clients for
Yeah.
start. I feel like I should explain just one thing to people that are
Yeah.
listening to this, and
Yeah.
that's around why do those advisors do it? So there's two reasons why. They might be tied, so they
Mhm.
might be actually tied to that particular company. If they're
Yeah.
not tied and they're independent or whole of market, it might be that they are working from what's their board have decided on a central investment proposition,
Yeah.
and therefore they're basically encouraging people to go off a particular what I would call a reduced platform. And that might have been very thought out, very strategic. It might be absolutely fantastic. But that doesn't mean to say that your existing pension scheme that you're already in, that you're paying, for example, zero point 0.1 on, and it's
Yeah.
really cheap, is best to move it into that scheme. And unless they review that existing scheme that you're actually in and give you independent bespoke advice, the reason they don't tend to do that is they charge on implementation. We don't. I charge on advice, and that includes reviewing the existing pension. So what they're trying to do is they're almost trying to preempt the fact that the client should move, and they give the advice that the client should move. They find a way to justify it without sounding direct here, but people do that. Because they can say, oh, well, you get more diversity and, it might be a bit more expensive, but, you've got access to this online system. And that's all noise. The regulator is actually only really interested in charging structures. And if you do go from something that's cheaper to more expensive, it needs to be adequately, more than adequately explained as to clearly what the benefits of doing that are.
Yeah.
And if they're not, and they're not listening to what you and they're not explaining it to you in the right way, then it's probably best to step away and reassess.
Yeah, get a second opinion. That's exactly what I said is let's get a second opinion. I talked about you. I talked about another person. I just always think, it's really important if there's red flags, if someone's putting you under pressure, it's not right. And pension transfers are hot under the press, in terms of moving something, it has to be a real justification. And
Yeah,
also pensions, some of these old schemes come with benefits like that they might lose,
yeah,
benefits that you don't want to lose. And that's why it's really important to work with someone that is qualified and understands the bigger picture. Um,
yeah, definitely. And I
so
I find that just going back to your point about like why get financial advice. I have clients that have come to me that have built up, for example, I try not to mention platforms, but I'll mention a few. Interactive Investor, Monzo Accounts, Hargreaves Lansdown, and they're like typically financial advisors. We don't use those kind of platforms because actually they're quite expensive.
yeah,
So that clients will come to me and say, well, I've done a little bit of this and I've done a little bit of that. That there comes a point where actually they start to realize that they are a structural engineer, they are a executive marketing manager, they are not a financial advisor. They don't really want to get involved in, is that the right thing? And it's not to say that those portfolios are done terribly, but they're worried about how they get to the next step. And some clients don't want to do any of those things. They don't want to even look at those things, and they just go, I'm not doing anything. I should be doing something.
Mm.
So there are people out there that will always do a DIY. There are always people that will never want to pay a financial advice fee, and that's absolutely fine. But even with AI and even with the way technologies are going, even with younger people being more financially educated than say 50s, 60s, 70s, and that's just a general sweeping statement I find with my clients. So apologies to anybody. I'm not saying if you're older, you're not financially educated, but the younger certain female clients that I'm seeing are that much more asking a lot more different kind of questions. Then they still want to physically speak to somebody. It might not be getting a full ongoing service that you speak to them every year, but they are looking for that initial advice definitely, and they are definitely got lots of questions around the planning element of like, what should I be doing? How do I make this work? How do I achieve the objectives I want to? So as an industry, I can see that we're going to need to evolve more in that area going forward as an industry, because the younger generation are asking very different questions.
Yeah, do you know, and this is the thing, I've done a lot of work with funnels, not funnels from an entrepreneurial perspective. When people think of funnels, they think of the sales funnel.
Sales funnel or a
Like
marketing funnel.
a robo advice, right? Where it
Yeah.
funnels you into an advice. It comes to a level where people, an amount of money, people will not even use it. You know, it's okay for setting up your Nutmeg. You know, Nutmeg has a great robo advice and it'll say, right, okay, use this portfolio number
Yes,
4 for your £100 because
that's
you're not
right.
as attached to £100.
Yes.
When it starts to become more money, you're more concerned about loss than
Yeah.
you are often about the gains. You're more caring about preservation and protection of wealth than making the big volatile jumps in the
Exactly,
market.
that's exactly what I find. Yeah, exactly the same. It's almost like want those clients that have done it on their own, and some of them have built, big bonuses adding to it every year. They might have a couple of 100,000, but they still get to the point where they're then going, well, I'm 45 now or I'm 50 now. I want to make sure I've only got 10 or 15 years left. I need to make sure that I'm doing this right. What else should I be doing? And quite often the platforms they're using are quite expensive, they're not diverse enough, they haven't got enough, they may be invested maybe in too much risk or too much in US tech, for example, a general good example. Um, and or they're not ethically in the way that they want to ethically be investing. And or they've just got a lot of money in sort of what I would call like their eggs in one basket. They're not sort of split. People with larger amounts of money, you don't just have one strategy, you might actually have two or three different investment strategies. So you're not relying on only like one fund manager's outlook or process. So we can start to mitigate some of that risk again when we start getting bigger and bigger figures. So with more money, more problems, more tax, more concern, more stress. Especially because once they've got it, a lot of people think they're going to lose it.
100%. And also, you're losing it if you don't have the right tax wrappers in the right years, right? So, it's use it or lose it. And that's why I do think it's important to have an annual meeting when you start to be, even when you don't have yet the physical wealth, if you are a high earner, when you earn over 100 grand, you suddenly lose your personal tax allowance, right? And then you want to be using more of your pensions maybe, and just that's the financial planning aspect. That's what I know you're working towards your chartered status, right? These are the things that when you take these exams you're really getting into the really quality planning to make sure you don't lose money in the years that it matters.
There is like a accumulation period where your children are like maybe like a little bit older, and you're maybe not paying out quite as much as you were for like childcare, for example. You might be paying, maybe instead you might have planning to want to go private school at a university, but there is times where you have like this sort of 10-year period where you really do need to make sure there's a certain amount of money invested so it can grow. Otherwise, you'll get to your sixes and you will
Yeah.
have to work until you're 75. And I think that's what people start to realize, that they can't do what they've done in the past. It's that sort of tick, that time ticking. Oh, actually, I'm getting, even me this morning, I looked in the mirror and I thought, oh my God. Like I need to dye my hair because I'm looking a bit grey today, and you start that more mortality sort of element starts to creep in when you're going, actually, I'm 45 this year. I'm starting to feel it, not in necessarily a physical way or a mental way, but just trying to see actually I've got this sort of time is ticking. And I think when people start to feel that, that's when they start to take their finances more seriously. And the annual review part means that you keep on track, not just from the projections and the financial planning side, but it keeps you accountable for, well, what are you going to do with that bonus? What's the deadline that you've got before you've got to make a decision? And
Yeah.
we're asking, as financial planners and financial advisors, we're asking those questions each year to make sure that, they're getting things done. So we're recording this at the beginning of March. My next 4 weeks at the end of tax year is really
Yeah, end of tax year. It's always a really busy time because people do leave it to last minute, especially execs, We have a lot of exec C-suite people that follow me, investment managers themselves don't know the planning necessarily. Investment bankers follow me. I've got a load of my mates that used to be in the investment bank. They
Oh,
go because they want to know the tricks and the tips. We talked about some of the tips that we want to share, right? Because it isn't always obvious to whether you use a VCT or a pension. VCT is inside your estate, pensions are outside your estate. All that, just knowing some of these things, it's really, really powerful because you work hard to make your money. And I think that's what makes you different. Two things come to mind when you've been talking. What makes you so different is the fact, number one, you do plan the life before you plan the money. You do the life, you do the financial planning, and you really look at someone's personal journey and take them on that journey and then think about the financial advice. But you also have loads of ethical and there's so much greenwashing out there with when it comes to ethical investing. You really take that seriously as well, right?
yeah, there's something that I'm really passionate about, and I'm finding it quite interesting at the moment where I've got clients who have invested very ethically, it may be 3 or 4 years ago, and they're not getting the returns that they want. And it's really interesting. Now I'm speaking to them and I'm saying, okay, well, so some of that is because the portfolios have moved into more thematic investing, so it's a little bit longer. So just do you want to explain the
Yeah,
jargon of thematic? So thematic investing is more like up and coming, sort of not sort of on the main stock market. We're not talking sort of S&P 500 or FTSE 100. We're talking sort of low level investing at sort of still smaller startup kind of. And when you add ethical to that, that sort of has a higher risk to it. So we're sort of discussing, okay, well, should we be remaining in that market for all of the portfolio? And over the last few years, I'm finding that we've had to sort of shift some of the money out and having discussions around, okay, well, that was invested extremely ethically. I'm talking impact level,
yeah,
changing the world, how people get access to water, social housing, the quality of food that everyone have access to in the world. We're talking real impact things that
yeah,
those particular clients were very passionate about. And some of them are sticking with it. I've got a couple who are some scientists and they work for a pharmaceutical company. And I said to them, look, very clearly you're losing money. And I've explained the benefits of change. And she's stuck to it and he's changed. And he's sort of gone back a step, not removed from himself completely from ethical, but not as much in dramatic side of things. And then I've got other clients who have said, okay, well, I just want to move a small amount. I just want to move, I don't want as much exposure to it. And having to explain the difference, the different kind of steps of levels, because what you would think is a sustainable or ESG, so environmental social governance fund, and you think, oh, great, well, that'd be great, won't it? It'd
yeah,
be invested like the impact fund. No, they're not. They are still mainstream companies. It
yeah,
depends on how the fund manager grades that individual fund. There's two type of grading systems, but typically both do an A, B, C, D, and then some of
yeah.
them have an A plus, a B plus, etc., or an AA or a BB. So depending on how that fund company rates that individual company, that might mean you have an ethical fund with Amazon in it. Whereas a certain client would think, well, Amazon's not
Yeah,
ethical.
Amazon's not the Amazon Rainforest Fund, maybe, but Amazon itself, not really.
No. And this is where it's not always greenwashing, which to explain to people is where people make out it's really ethical and it's actually not. It because I think an Amazon is quite an obvious example. You'd expect no oil, no armaments. That's sort of pretty obvious. But it doesn't mean that they're investing in companies that are going to change the world. You're
Yeah,
still talking companies like Microsoft, which if you've got a real issue with armaments, you might not want to be invested in Microsoft because actually they're heavily involved in the US Army. So you have to sort of have a real in-depth conversation with clients about ethical investing because and it's interesting, I have to do it every year because it can change over
yeah,
time
yeah,
based on their level of investing experience, the level of returns, and also their capacity to how seriously they take the money. I'm also finding certain clients who are older, women in their 60s that started investing at 60, they're now 63, 64, 65, and they're not seeing the returns that they'd like over the last sort of couple of years. Ethical investing before 2 years ago was fantastic, but they're not seeing the same kind of returns and they're having to really seriously look at their values and say, well, actually, maybe I need to adjust this for my and put myself first. So it's
yeah.
quite a tricky area in the current market.
I think this is such an interesting topic because we think that we can't put ourselves first, right? We've got to do everything for everyone else, and we feel like, if you're in a group where people are putting pressure on you to do ethical investing as well, it could be that all your friends are doing it. Um, it's really important that you have diversification. Diversification not just across tax wrappers, but across different assets. What is an asset? Cash is an asset, and then you might see cash, then you might have some property, then you might have some investments in the stock market. Diversification is so important, and you can still do good. You can still do your impact investing, but you don't have to put all your money in it. And what I love about you, Rebecca, is you know so much about the behind the scenes of these companies. Like not many, let me tell you, because I put my head behind the decks. This is what I love to know. I'm like the knowledge that I have about even Vanguard as a platform I was not impressed with when I started doing some research recently. And sorry, Vanguard, I'm not here to
Not sponsored by
name and
Vanguard.
shame, or I don't sponsor anything, please don't shout at me. And again, I'll just say we're not giving any financial advice here today. This is all just knowledge of me and you having a chat about things that we really care about and believe. But
Mm.
fundamentally, you know so much and you can give that education, and it's that honesty and transparency without any guilt and shame about what you're trying to achieve. If you do this impact, it could stop you from making the money, which actually might mean that if you make the money, you could retire at 60 or 70 and then go and volunteer for the Amazon Rainforest Trust. What would have more
This is the
impact,
thing. Yeah,
right?
this is the thing. Yeah. But we have, as a regulator, with my regulated hat on, I can't
Yeah.
be deemed to sort of make the decisions for the client. So quite
Yeah.
often they'll say to me, well, what do you think? And I'd say, look, if you want financial advice, for example, a client this morning, slightly different, but she's got a pension with work. She's getting about a 19 to 20 grand bonus in a couple, like the next 2 weeks. She's got to make a decision in the next 5 days to let payroll know whether to put that bonus into her pension. And she's saying, okay, what should I do it or not? I said, well, you actually don't have any emergency savings. You've spent it all. And normally this money would come in, you wouldn't pay it into a pension, and you would spend it on a holiday. I said, you really need to have some emergency money. So I know you want to put some money into the pension, and you should, because that means you're 45% taxpayer. I said, and also, if you did start to bring it down and you paid a little bit of salary sacrifice, you'd get some of your personal allowance back. So there is financial advice wise, the best thing to do is put as much as you can afford into the pension. But actually, on the sway of it, you do need to have at least 8 grand in the bank just as an emergency and not for a holiday, not to spend it.
Mm.
Because you need this backup money which you currently haven't got, and we're talking someone that's on obviously a high salary, we're talking over 130,000, and that she hasn't got any backup savings.
Yeah, 'cause you
So
could get made redundant like that.
like
We
that.
just don't know. Or you could be hit by something that stops you from working. And I know that you also do protection, right? You don't just
Yeah.
do advice, investment solutions. You also do the holistic,
Yeah, we've
making
got
someone suit
wills in my
pay.
team. We do some trust work. We do life insurances, income protection, critical illness. If someone does mortgages in my team, as well as like the holistic financial planning. So should I overpay on my
Yeah.
mortgage or should I invest? So it's very much a bit of a one-stop shop. I think for you, no point in you going to one person. I'm not an accountant. I do refer people on for sort of more
Yeah.
specialist things like that. But I think if you're going to get advice, get it from somebody, and I'm not just saying me, but just when you're speaking to your advisor, or you're approaching an advisor, it's good to know, what do they do, what's within their remit, and they should be looking at the whole picture. So I spent actually 20 minutes on a call this morning explaining why she'd done her will. They weren't married, they've got one child, and I spent 20 minutes explaining why he needs to go and sort his will out because he hasn't done it and it's actually sitting in his inbox. And that was actually at that time for that couple, that's the most important piece of
That's
conversation.
the
The rest
most
can come
important
later.
thing. 100%. Because, and one of the words that I wrote down as you were talking was you don't want to hit burnout. Often we're flying through life in our 30s. We get to 40 and realize, blimey, I'm getting tired now. Do I want to work to 60, 65?
Yeah, right.
So there is sometimes a time where you actually need to just be in the market so you can compound and accumulate investment returns over time, and trying to get that money away whilst maybe you're not paying for things aren't quite as busy. Just get it invested, because even if you can put smaller amounts in, it can have a massive,
Yeah.
profound impact over time, because you might have energy today, but who's to say you're going to have energy even in 5 years' time? Because our energy can shift and change. We can go through challenges. Things can,
HRT has helped me, that's for sure.
yeah,
Yeah, the perimenopause, menopause I think for women is a big issue. It really affected me, and I knew somebody that ran their own business that could help me with HRT. Otherwise, I wouldn't have been able to study for my exams. I wouldn't have been able to take on the clients I took on last year. And it does actually affect a lot of women leave the workplace. Statistically, I've got a podcast about this. She actually came on the nurse specialist came on when we talked about this particular subject.
mm,
It's a big issue for women leaving the industry, not just because of children.
yeah,
Um, I think for a lot, you mentioned about the smaller amounts, and I think for a lot of people, they seem to think that they need to be on a really big salary with a load of money in the bank, and that's when they'd start to go and get advice. And I think that's not always the case, and that's the other thing where we're a little bit different because we don't have a you don't have to come to us if you've got like £1 million or you've got a really big pension pot. We have clients who are running their own businesses, for example, and they're setting up a pension for the first time. They might have had small pension pots in the background, but they won't accept any lump sums or any additional payments from external money coming in. So we would set up a pension for them as a one-off fixed fee, and they don't even have to then be an ongoing client thereafter, because it's really important that people start something. Because then when you have got that little bit of accountability, or your accountant says, well, do you want to put some more in this year? Or you set it up and you go and you get a statement through in the post, it should sort of encourage you to go, okay, oh yeah, what did I do with that? What else should we be doing here? So you just got to start somewhere, and there can be quite overwhelming for people because there's a long list of things to do. But I think it's just a case of picking one particular area, getting that done, and then working on to the next.
100%. I think we were going to finish on some tips, weren't we?
Yeah,
In terms of helping people to kind of take something really practical and
yeah.
impactful away. If someone's listening to the show, what's one of your, biggest tips that
So the
you
way I describe it, just leading on to what we were just saying, is it can be really overwhelming. And you mentioned earlier on, like, should I do a pension? Should I do a VCT? Should I do? There's a sort of a hierarchy that I talk about in my books, and Maslow's hierarchy of needs. And I've sort of taken that, but taken it more from like a product or a financial planning side of things. And to the bottom is budgeting. Just start with the basics. Get your budget right. Get a spreadsheet. I'm sure Emma's got one. I've got one. If anyone wants one, just shout. You could just create your own, go through your bank statements. You can export from your bank account into an Excel spreadsheet and just start to categorize your spending. And I don't just mean your fixed expenditures, which means things like your mortgage and your utilities. You know they're a given, right? It's the other spending. And I'm very conscious about my other spending. I say that's one of the things I'm really good at. So I have a pot for everything that might be my hairdresser, someone's birthday that's coming up for the month. I budget my whole month out, so I know how much I've got spare. So I know where my money's going. And then my biggest tip is give your money a job. If it hasn't got a job, where's it going? What's it doing? So that's like the bottom of the hierarchy. It's like your money, your expenditure. And then you can start to say, okay, well, this is actually how much I've got spare, or this is how much I could save. Over and above that, the next step is, okay, we need emergency funds, so money to fall back on if something was to happen. Now, you don't necessarily have to do all or nothing. So some people say, well, I have to have £50,000 and then I'll go on to the next step. It's not that. It's just a case of looking at it saying, okay, well, could I put aside two or £300 and I work towards that piece? So in X amount of time, I've got some spare money. It's looking at your other expenditures, so bigger expenditures. So things like in the future, car. A lot of people like to have a nice car these days. Personally, to me, they're a depreciating asset. I don't spend money or any focus on it. I don't have any finance on it. I don't have any HP or anything else. So if you are a car person, then you're saying, okay, well, a proportion of my income is going towards that thing. You do at some point need to say, okay, well, I can't have the fancy holiday and the fancy car and overpay on my mortgage and max out on my pension. You have to draw a line somewhere and say, okay, well, where's the give going to be? So that sort of is part of the planning piece and deciding, well, giving that money a job each month towards those goals, those more medium or smaller term objectives. Over and above that, then you start looking at actually insurances, because if something was to happen from a priority perspective, you do need something to fall back on. You don't necessarily want to be using up all your emergency money, which might have taken you 3 or 4 years to build. So being made redundant, being off sick from work, looking at what you've currently got in place. A lot of people have life cover, just life cover. Um, make sure it's in trust, so it sits outside of your estate for inheritance tax planning would be one quick tip. You can just ring up the insurance company, ask for the trust documents. They know what they're doing. It's quite straightforward. Um, then the other over and above that is critical illness. That can be quite expensive to some people. They find it's a lot because unfortunately you're more likely to claim. It's not because it's not worthwhile or there's no value in it. You're statistically much more reason to claim on a critical illness policy than you're on a life cover. So it's good again if you just have some cover, not necessarily your whole mortgage, but maybe a 25% of it, half of it. So it gives you some degree of safety net. Then there's income protection, which is like a sick pay, but it's your own policy, and you can mimic it or match it to around what you currently get at work. So at work, if you get 6 months full pay, for example, and then 6 months half pay, you can have a policy that kicks in after 6 months for half pay, and then after a total of 12 months, it can then pay out up to 65% of your salary net of tax. So you don't pay tax on it. Once you've done insurances, then you can start looking at pensions is actually the next priority. So we talked earlier on about, portfolio of money. It's just basically a form of having income in the future. But I'm talking it in the context of, okay, well, this money is earmarked for my future. So whether it's in a pension or in a investment vehicle, obviously a pension does have very good tax brackets and good tax relief on it. But it's earmarked for that longer term planning. So we're talking, usually 57 for pension terms is when you can access it. Most people on average are retiring between 62 and 67 at the moment. So it's that longer earmark of money going towards your pensions. So that's looking at trajectories, looking at your existing pensions, adding them all up, speaking to your workplace pension if you are paying into one, and asking them for projections at a particular age. Just pick an age, say 60, 62, pick an age, and based on what you're currently doing, what will that all add up to? Next one after that is then investing. So what a lot of people do online and what you see online is they don't do any of those other things, and they actually get to the point where they see Bitcoin, they see not TEDx, TradeX, which is exchange when you're on the exchange rate, and you're obviously this, Emma. And they start doing other things, or they start looking at Bitcoin, or they start looking at buying gold, and they're investing, trying to catch up with their money and going, well, I need to make this money work for me. And I'm not saying that never works, but from a strategic priorities perspective, the other things need to come first. And once you start getting returns on those other investments, you want to do that in a tax efficient manner so that it reduces your overall tax bill. And there are other ways to do that and other tax wrappers to do that.
Wow, I just think that you need to kind of, if you didn't catch all that, just keep listen back to it because there's so many nuggets, you know. And interestingly, when I do a wealth strategy, it's we start with the financial freedom of what you're spending. I talk about spend, save, and investing. Spending for today, saving for that middle time of like what is that going to be, and then investing and then protection. I always think you're more likely to not be able to work than die, which is a good thing, right? You're more likely to something to happen to you with
Yeah.
income protection, not even critical illness, but it's getting that advice because one of the tips for that is that it's one of the few parts of advice that remains what I would say it's not free, it's got commission. So you don't have to always pay for the advice. You can still get advice
And we
because there's
get clawed
commission.
back. That commission, by the way, is clawed back. So if I set up a policy for somebody, and I'm not saying that this is different for me because I'm a direct business owner, it's different for a salesperson in a call center because they won't care so much about the business profit margins. But for me, that commission is clawed back. So that is something I want to avoid as a business owner. I do it in three models like you described, but I think it's Bob Proctor or somebody like that in the US. So I like to make sure it's not, this is not originate from me. I did not steal, I borrowed this from them. And that's make phase. So make, manage, and multiply. So what a lot of people do is they jump into the multiply phase
Yeah.
because they're just like, oh, well, I want to multiply my money. And actually, I'm
Mhm.
not saying you don't do the making the money and the managing the money at all. But in terms of focus, you focus on, okay, I'm going to get that promotion. I'm going to take that qualification. I'm going to get that new client on board. I'm going to speak to my accountant about a different way to strategize my business. I'm going to take on a PR person. I'm going to you go do the things to make the money, especially as business owners, and then you look at different ways to manage it. Am I being most tax efficient? Do I need a new accountant? How am I spending within my business? Do I need to make cutbacks? Is my PA doing enough? Am I efficient enough in my operations? And then you can start looking, okay, how can I multiply it? So that's otherwise people get overwhelmed.
Yeah. Thank you so much for all of your wisdom today. There's so many amazing nuggets in that, starting out from your journey and the inspiration all the way through to those tips. And I think what a valuable session this is for people that are looking for wealth advice, you know, to really start to understand how they can start to build their wealth, where to get started. Thank you, Rebecca, for your time today.
Oh, thank you so much for having me. And yeah, it's lovely to work with you. I think it's quite nice how it just clicks. So it's really nice to have somebody that gets what I do and also I understand what you do and the impact you have for clients. And that it just works so well.
And if anyone wants to get in touch with Rebecca, please don't hesitate. All the links are below. And yeah, let's enjoy a very wealthy financial future.
Thank you.